Okay, so today we're gonna be going over the stuff right now. Let's go over it. So for this week, for this coming week, expect consolidation throughout this week because we're gonna be getting the week, because this week is the week before January ends. So right here, this is right here is first stage plus second stage PDRE right here. So we have first stage and second stage PDRE right here. So this is on the DXY. So let's go to the daily at first. So on the daily right here, we have all of this. We have a new quarterly shift right there. Right here, we have a quarterly shift right here. And then we pull from here to here, we get this reversal right here. So right now, what do we have right here? We have some interesting things right now. We have some interesting things. If we see that this is a daily fair value gap high right here, so I'm just gonna remove that into days and put that into hours. So that's a daily fair value gap. So this was a 20-day look back right here, which we just closed above right now around this candle. So right now, what this candle is looking like, if you look at the bodies right here. So today is Monday, today is Sunday, so I mean it's Sunday but it's Monday, but at the time it's 11:20. So when we open we went high, we went higher, now we're going lower. So this is where the PDRE ends, or the low of the day. So we closed above the 20-day. So because of this is a market maker buy model right here, because we have the market structure shift, then we have low risk stage 1 and then stage 2. So my terminus right now is the 60-day right here. This is my terminus right here. So this is practically the first stage right here. If this is the first stage, then I want the third stage to be around here for this high right here. But we'll see if price is willing to go on this place higher above here. So just trying to make things simple and make my charts cleaner. So this is it. So we see that last week we were still in this range from Tuesday to Wednesday. We were just still in this range. So the whole of last week was just in this range because we closed above here and we were inside this silver bullet zone. In this silver bullet zone, we have a fair value gap right here and also this volume imbalance. So from this volume imbalance, we hit it, we tagged the volume imbalance right here perfectly on the body and the stuff. So we tagged it. So this was the weekly draw for the low of the week, because low of the week always hits on the daily and the weekly. If you go into the weekly, what did we do draw to? Probably the okay. Yeah, you went into the 50% of the IFVG, but on the daily it's more refined and better. So that is just it. So and now we're going higher. Now if we go into the daily, if we go to the 1 hour, sorry, if we go into the 1 hour, we could see things happening better. We have a turtle soup inside this PDRA and a daily volume imbalance, and now we have a market structure shift right here. After this market structure shift, we see boom, and then we go lower. So this is particularly our first stage or our low risk. After that, we see higher prices, higher prices. So this is stage 1 complete. We see lower prices. So this is practically our second stage right here. So now this second stage needs to be complete if price should take this high out. If price takes out this high. So I'm gonna just call this buy side liquidity. I'll just change it right here. So we'll just call this buy side liquidity. Bottom. So if we go, because this is the 1 hour and I want to see things better, I'll go to the 15 minutes right here. And then on the 15 minutes, we go see things better. We see sweep of liquidity, market structure shifts. Then we go lower from here, this is first stage right here, or low risk right here. So low risk complete, second first stage complete, stage two right here, and then for higher prices. So for here, I expect us to because of tomorrow is 29th, right? Because tomorrow is 29th, I expect us to consolidate right here. Just make some consolidation tomorrow, if that could be possible, because if we consolidate, even if we use from here to here, we could consolidate and trade lower, which is a possibility. But at the same time, it wouldn't happen because of if things happen. So my validation level for next week would be practically this low right here, because this is the start of the first stage right here. If we close below this low right here, this is the start of the second stage right here. So I don't want price to close below this low right here. It's going to be 1 day, and yeah, so that is my invalidation level. So I'll remove this invalidation level right here. That is my long that is my long-term invalidation level, but I'm going to remove that right there. So for this week, I'll be setting invalidation level. So this week, that is my invalidation level throughout this whole week. Every single week, I always put invalidation level. So this is my week invalidation level for this week. So I'll be invalid if this low gets taken with this placement. So right here we have sweep of liquidity. We have already a market structure shift right here for lower prices. So of course it looks like a 2022 model for lower prices, but I want this to break because I don't see that better. So what I want price to do right now is for us to go lower right here, to go to OTE, maybe OTE, make some sort of third soup right here, and then go for higher prices, because I want this lows taking this failure swings right here. And also we have this huge inverse FUG, so that's what I want to happen. So that this is my plan practically. Let us try to put it at OTE right here. OTE. This is my plan, my game plan right here. OTE. Let's put this at 9. This is the game plan right here. I'm going to change this to visibility. Okay, that's good. Then change this to visibility to days. Okay, that's also good. That's very, very good. Now let's go to the daily. I'm going to change this visibility days. So I'm going to change this. Yes, that is better. That's very better. So this is basically so what I want for this week is just practically a if you go into the 1 hour, like I was saying before, what I just want is for us to take out this high. Generally this week I want us to take out this high, but then where do I want our where do I want this week's low to be at, right? This week's low, I would like it to be at Monday, right? Because Monday, practically, we might do something. I haven't seen the news, so I'm not going to see the news until I know where my draw is. So right now, this is my draw for this week, and then this is also my draw for this week, right? And then where do we have? We have like second stage distribution. Somewhere on the daily time frame we have second stage distribution, but this is where practically my draw for this week, just for higher prices. Where is my where will be my low of the week? My low of the week would be this daily huge inverse fair value gap. If we go into the 4 hour, we could see probably a period that it could serve us as our, we could see that right here is this daily fair value gap high right here. So, and it's also inside the OTE range. So what I'm thinking is that we could go lower down here for higher prices. But already what my thought process is that this right here, this inverse fair value gap is already holding us. So I already like this idea of this inverse fair value gap holding us, or we could actually just go down here. I'm gonna remove this actually. We could just use this as the one that is holding us currently. So right now I just think that this is holding us right here. So now if I should go on the news, so practically this is what I'm thinking for just higher prices. I'm not thinking about anything, I'm not thinking about anything, just two scenarios basically. What could happen is that we could do two things, right? We could do one, we could do go up, hit rejection block right here for lower prices, and then we take out this high right here. So basically rejection block right here, and then for lower prices to be OTE of this range, and then for this high right here. So that could happen because we have we almost hit a rejection block right here, and then we might also hit a rejection block right here. So rejection block down, up, that could happen, or this could just, or it's already happening. This is just for the week right here. So now let's go to the news. So on the news right here, we see Monday is probably consolidation, or Monday could just be the day for us to just stay still in the range. Or I will just see what Monday provides for us, but I want Monday to provide some, not some huge moves, but a lot of consolidation. So Tuesday we have 10 a.m. We have the CB consumer confidence. We have Wednesday we have no FOMC statements. We have Thursday we have unemployment claims, and then we have Friday we have um unemployment rate. So what could happen, right, is because since it's going to be a new month, right? So what could happen is that we could just range around here, and then since it's going to be a new month, so if we think about the power three, right, we could go lower right here, right? Since Thursday's unemployment claims, what could, and is at 8:30, so since Thursday, so we could go lower, providing us with the um monthly low, and this could serve as this could serve as is a second stage distribution for this leg, for this whole market makeup buy model. So maybe we go up, and then on Tuesday we start to reverse lower, and then on Wednesday we also do something like this. Wednesday we provide like a 2022 model for lower prices, and then on Thursday 8 a.m. we go higher, and then Friday is a continuation. So that's what I'm thinking right there. That's practically what I'm thinking right there. That this is just for DXY basically. So let me change this. Yes, that's good. This is just for DXY currently. So I'm gonna remove this right here. I'm just gonna leave this right here. So this is basically my thought process. This is basically my thought process. But it is alright if we don't go down, and that is totally fine. Let us see. Let's see if we go to if we go to NQ, let me put, okay, that's here. Let's do NQH. Okay. So if we go to the daily, right? If we go to the daily, we could see, if we go to the daily executions, let's remove execution. If we go to the daily, we will see, we could actually, let's go to the monthly, right? So on the monthly we have this huge market structure shift right here, and also on the also we took out the all-time highs. We took out the all-time highs last week. This right here is the all-time highest, right? We took out the all-time highest, so because of we're gonna be using TCM's learning teaching right here, right? So we took out the all-time highs, right? I'm gonna remove the invalidation level right here. So since we took out the all-time highs, see what I expect us to do. I'm gonna remove this. I'm also gonna remove this, and now I'm gonna do this, right? So we have a close, right? So meaning if we have a close, then the next candle right here, this would be our EO, engineered origin, right? So the next one will be engineered origin, and then right here for price, what I want is for price to trade lower below this, which we already did. We traded lower below this. So now what two things are gonna happen right here, right? If price, if since we have a change in state of delivery right here, there's a close below, we have this right here, right? And this is already Monday, right? Yes, it's already Monday. So what I expect of us right now to do is to trade lower. I expect us to trade lower into this this right, this sell side liquidity right here. After that, I expect us to trade higher into back into this level right here. After we do that, and then we start trading lower, right? Because what I want is for us to go up, to go down, to go up. So up to go down, to go up. If we go up to go if we go up to go down to go up, so all we have to do is go down to go up to go down, basically. So um to go down to, so this is basically my draw. Tuesday is basically my draw. This could be my draw on Monday, but because of this huge fair value gap, so um I'm gonna put some notes where somewhere. So we have so here. So we have go here. This. Okay, so since we already took out that, so what's gonna happen here is that since we're gonna be going higher, let's try to go. Let me go to the 3 months. We already hit the order block from the 3 months already on Tuesday, 6th of January. So if we go into the one, give me one sec. Okay, sorry, my bad. So let's go into the 1 week. In the 1 week, we have this huge fair value gap, this huge BC, right? So for the 1 week, what I expect us to go is this low right here. So let's see. Gonna change this to black. 1 week, average high. So that'll be 1 week average high. If we go into the daily, we have this. So where's my weekly draw? My weekly draw is down here. Now where's my weekly reversal point? My weekly reversal point is from right here. It starts from right here. It's already started. Now where else could be my weekly reversal point? My weekly reversal point could also be up here. But right now, this is where my weekly reversal point starts, right? We have a displacement. We've already tagged into it. If we go into the 1 hour, if we go into the 1 hour, what do we see? We see a market structure shifts. What do we see? We see OTE. Boom. We see this stage low risk complete. Second stage, first stage completes. And now second stage. What do I want second stage to do? I want second stage to be complete. So now remember what I said, that we want up, we want down, we want up. So now I want down. I want down right here. This is my draw. This is what I want. I want down, I want up, then I want down. We could even go up here, to be honest, or we could just go down here. Just something between these lines. What I want is that I don't want us to take out this high right here. Actually, taking out this high right here, because this high has this fair value gap right here. So this is our intermediate high right here. This is my invalid level right here. I don't want to close above there, because if there's a close above here, there's possible ways that we could go higher into this high right here, and also this high right here. So this is practically what I want throughout this week. So this right here is 1 day IVIB, and then we go to bottom. This is basically what I want right here. So this is basically what I want. So now let's see. For ES, let's see for ES. I'm going to now we could already see that we are consolidating right here. We have equal highs right here created in Asia. We have equal highs taken, so we're just consolidating right here. So now what could happen is that what I want to see is, since we're consolidating right here for Asia, what I want is that consolidation in Asia, then we sweep these lows right here in London. After we sweep those lows, we trade higher, and then we take out this high right here in Asia, from Asia right here. Take out this high right here. After we take out that high, we trade lower right there, and then we have this right here, and then we have a fair value gap right here for lower prices. So that is what I want to see. I want this high and lows to be taken during London or pre New York, or the highest could be taken in New York, but I would like to see something like that. So if we have the RTH right here, we could also see this lows right here, which could be taken right here. Was it taken? Yes, the lows. Yes, the lows were taken. 13. The lows were taken right here, but it wasn't taken by this right here. So that's what I want to see, because this is the RTH right here. We're only using regular trading hours, so this is the lows I want to see right here. Right here is the lows I want to see. This lows right here. So that's regular trading hours. So yeah, that is what I would like to see. But yeah, I just like to see consolidation Asia, London. We take out the lows there, and then New York we take out the highs. So that's playing by narrative. And then we have a volume imbalance here, so we could play off that. So right here we have a daily volume imbalance. So now let me see if we could see an hourly volume imbalance right here. We have, yes, we have an hourly fair value gap right here, which is above our invalidation level. I'm just going to mark that across. right here, black 1 hour AVG low. I'm gonna put on bottom. That's 1 hour AVG low. Some liquidity bottom. Save as. Yes, liquidity. Yes, okay. And then there should be sell some liquidity. Yeah, so I would like something like this. This is the range we're in currently. So right now what is our premium and discounts? Let me do that one. So where's our premium and discounts? Starting from here to down here, that's our premium and discounts right here. That's our premium and discounts, right? This is our right here. From here to down here. That's our premium and discounts right there. So this is basically OTE right here. OTE of the range. So we're basically in an OTE from Friday's high. Right, Friday's high? No, not from Friday's high, but from the high created. So if we use this to this, if we go to 50%, we just went above in Asia, so that's more than enough. So OTE. So now this is what I expect us to do. Let's go back to DXY. The plan for DXY, this is what I propose. So for YM, let's see YM, shall we? For YM, I haven't seen YM in a minute. So for YM is going to be going higher, apparently. For YM, we have high made on Friday, right? We have a high made on Friday, which is right here. If you look, we see an SMT right here. So what do we see? We see SMT here, and then we see an SMT here. Right here on the daily, we have an SMT right here. So that is good. So SMT weeks NQ, SMT NQ, and then right here we have right there. Right here is the SMT right here. SMT, it's YM, and then on ES we have let's use from here. We have SMT NQ, right? So we have lows, the body closes below, body closes above. So this is our valid SMT right here. Once this SMT comes, what do we have? We see this low right here, right? What are we looking for? We're looking for a swing low, right? Right here is this is starting from here. Right here is the swing low. If we close below here, that is the market structure shift. Right here we close below. We already started closing below right there. We already started closing below. Right here. So it's a 3-day SMT. 1, 2, 3. Can you see how it's a 3-day SMT? 1, 2, 3. It's always a 3-day SMT. 1, 2, 3. That's how the quarterly shift is. If we're going to this previous day right here, this day, this SMT that happened, right? Let's go lower. This SMT that happened, this is 1, 2, and 3 right here. 1, 2, and 3, right? So 1 and 2, and then 3. That's a 3-day SMT. Let's go low. Let me show you. So the quality shift is always a 3-day SMT. So 1, 2, and then 3. 3-day SMT. Always a 3. So this happened in 27th, this happened in 26th, and then this happened in the 30th. So those 3 days are important, right? Those are when the quality shift happens. If you look over here, the quality shift didn't wait. Why wasn't this valid right here? Right? Did it happen before? We have 2, and then we have 3. He had the same pattern, right? 1, 2, 3. There was no shift. There was practically no shift. There was basically no shift. So I don't know why I would say that there was no shift right here. So that's why this failed. This right here is a quarterly shift right now. We are in a quarterly shift currently. We are currently in a quarterly shift. So any time I was long during here, I learned from my mistakes that I shouldn't be long. Right here is our quarterly shift. Right here, right here, right here. Now, if we zoom out, let's zoom out to here. Let's zoom out to here. Now we could start seeing things better. Right now, I am shorts. I am definitely shorts right now. So what is my invalidation level for here? My invalidation level would be this right here for shorts, because currently I am shorts. This will also be my invalidation level right here. Invalid. This would also be my invalidation level right here. Actually, it would be right here. Why this high? Because this high is the same high that we shifted right there. And this is the SMTI right there. So invalid right there. So that would be my invalidation level. So what is weaker? What is weaker right now is NQ. So this is what I will be trading tomorrow. So right here we have bullishness right here. So what I want to happen is for us to go lower right here. So this is basically the quarterly shifts right now that's going on. So this is what I should be paying attention to. The quarterly shift happens before or the month. Now let us go into an example, right? Because this is very important, because this is how you make money, right? Where did these quarterly shifts happen here? It happened from, let's see, this August quarterly shift. When did it happen? Let us see right here. That's July. Yeah. Do you see this shift right here? From here to here to here. Look at that shift. 1, 1, 2, 3. Look at that shift right here. It's actually a 4-day. Right here, it happened in a 4-day. 1, 2, 3, 4. 1, 2, 3, 4. So 4 days. Boom. Quarterly shift. And guess what? It happened on the 27th. It happened on the 27th, right? It always happens before, or it always happens when there's before a new month starts. So look at this quarterly shift. Boom. Quarterly shift. Look at all of this. Boom. Quarterly shift. So from this whole month, this is where the quarterly shift started from, right here. So as soon as we close below, boom, this is where the real quarterly shift started from. And then boom, Do you see that? Do you see that? So that's very, 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 very important. You don't need you don't need to if there's no SMT, so that means the quality shift hasn't happened. There needs to be an SMT from the whole of, because right here was there any SMT? There was no SMT. So the quality shift hasn't happened. Right here, was there any SMT? There was no SMT. Why? Because the quality shift hasn't happened. If we go over here, there was just consolidation right here to cause confusion that the quality shift has happened, but as the quality shift happened, no. Right here, what do? We closed above, right? So 1, 2, 3, right? Right here we had a 1, 2, 3, right? That's for lower prices, and this is for what? For lower prices. Right here, I actually thought that the quality shift has started because we had a sweep of liquidity, but if we use bodies, right? That's why I like using SMT for bodies. We closed below. If you look here, we closed below. We closed below. We closed where? Above. Sorry, from here, we closed below. There was no SMT. There was basically no SMT on the bodies. But right here, we could see from body to body on the daily, from here to down here, from here to down here, from here to down here, is an SMT. There's clearly an SMT. So I'm using the wicks. But right here, this SMT failed. Why did this SMT fail? How could you avoid this from failing? I don't think there's a way of avoiding this to know if this SMT will fail, because this SMT looked like it was valid. It did look like it was valid, but as soon as we market structure shift here, market structure shift here, if we didn't market structure shift right here, then it was bound to fail. It was absolutely bound to fail. If we could market structure shift here, market structure shift here, but we didn't market structure shift here, it was bound to fail. It was, this whole SMT was bound to fail. You look over here, 1, 2, 3. We have 1, 2, 3. There's no SMT right here. But right here we have 1, 2, 3. We have this right here, and then we have from here to right here, right? We have from this low right here to here. That is the SMT right there. That is the SMT right there. What I'll say is that this is the market structure shift right here that we wanted. This is the huge SMT right there. This is the SMT right there. At the same time, this is an SMT right here. We have this huge SMT, and this is a huge order flow right here. A huge order flow. So we have this market structure shift right here. So I'm gonna delete this. I'm gonna delete this. I'm just gonna put market structure shift right here. Market structure shifts. Here I'm also gonna put market structure shift. So this is just it. And then also here we have what? What do we have? We have a market structure shift because of this high right here. Right here. All of these candles have a market structure shift. Yes, they all did. They had a market structure shift, and then they had an SMT. So this right here is the I want to say is the real order flow. Was the real order flow right here. So what could happen here is that we could just go lower to go higher right here, because we have an SMT right here. So the real one happened. When did it happen? Happened right here. So it happened right here. It happened on the same day. It all happened on the same day. So from here to up here. We use 4 standard deviations. Into 1 hour. Oh, my laptop is about to die, but try to do days. Right, so 1 day. Oh, this is taking long. Need to do this. Save as some variation. Yes, okay. I'm still bullish. I'm still bullish, but right now I want us to just go for internal liquidities right here. Sky is the limit, as ICT said. Sky is the limit. Because we all have a market sugar shift. But what could happen is that we could go inside this range at the same time. So let's see what could happen right here. If this happens and then we can just continue shooting up, I could just trade something else. I could trade the crude oil, or I could trade something else like the um well, yeah, I could trade the crude oil because the crude oil is a very good market. Yeah, the crude oil is a very good market, to be honest. I've been trading it for some time now. I've been trading it, but it's a very cool market. It's a very good market. Very good. You have right here. If we go into 15 minutes, let's see something cool. Market sugar shifts. And stage right here. So market sugar shifts. And prices. 7 right here. Market sugar shifts. Fire prices. Then first stage right here. Basically done for the day. Then 18 can 18 GH, prices, fire prices, prices, here, fire prices, go lower. Yeah, we could go to EUR, the EUR futures, right? They have futures right here. But this isn't it. EUR. There's futures. There's if screwed up. Yes, there's what's it called? Six what? 6J. There's six. I like the British pound, so six. Yeah, this is it. Here's what we could trade this one. This is the British pound right here, so we could trade this basically. This is the British pound right here. And the market shifts and then going to lower prices. Yeah, we could trade this. Here we go to the 5 minutes. It looks very choppy. Absolutely choppy. So we'll be trading it on the 15 minutes. 15 minutes and the 5 minutes for the anytime we want to trade the British pound. Let's go to F. So we go to 6 right here. We go to 6. We have Euro futures right here, which is also this one. If we go into the 5 minutes, I could trade Euro futures, right? I could trade it. I mean, for the 1 minute would be something else, bro. Precisely, the 1 minute would be something else. So the 5 minutes is basically our limits. We have low, we have this, shifts, OTE. Then we have, what do we have? Boom, boom, boom. Boom, boom, boom. Silver bullet is right here for this low right here. Boom, 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 boom. Go to E right down there. Boom. Market to the shift. Entry right here, 10 a.m. Lower. That was on Friday. But yeah, this is basically what I'm going to be trading tomorrow. Hopefully, I'm gonna wake up tomorrow, but I'm gonna sleep tomorrow. But yeah, this is basically it. So see ya.